Welcome to the Vine Resources Podcast Show with your host, David Lawrence.
Welcome to another edition of the Vine Resources Podcast Show. Well, this week, my guest is Edrizio de la Cruz. Edrizio is the CEO and one of the founders of Arcus. Edrizio, thanks for joining me.
Hey, awesome. Thank you for having me. Excited to be a part of this.
Edrizio, you're over in New York City, fabulous city.
Yeah.
Why don't you share with us a little bit about you, the company, and who Arcus is?
Fantastic. Co-founder and CEO of Arcus. We are a B2B fintech API that powers a fintech as a service platform for any business that wants to launch a fintech business. Some of our clients include retailers like Walmart, 7-Eleven, big banks like Santander, BBVA, or big tech companies, big fintech companies like Rappi. We're headquartered in New York and Mexico City. And we have about 65 employees.
Fantastic. Edrizio, tell us a little bit about the services you provide. You obviously just went into a little bit of detail there, but tell us a little bit more about how you add value to your organizations.
Sure. We in the past 5 years, we've seen a major tidal wave of digitization of financial services and the democratization of financial services, whereby almost every business has a fintech component.
Yeah.
So a lot of these businesses, a lot of these non-tech businesses or non-fintech businesses have been launching digital wallets. And with the digital wallets, they want capabilities like bill payments or paying off credit cards. So we help, we are the backbone behind those digital payments. So for example, Walmart launched a digital wallet called Cashi. And with that digital wallet in Mexico, you can deposit cash and you can pay bills or pay off credit card or pay off a cell phone inside that digital wallet. And in Mexico, that's quite valuable because otherwise the consumer will have to go to 10 different places to pay 10 bills every month. And now, thanks to Walmart's Cash, they could do it digitally from inside of their app. So we're the backbone behind those bill payments in the background.
Understand. That's pretty amazing. And I know obviously you've got the financial data services, digital wallet services, payment services. Where is the biggest opportunity right now, and what's the biggest challenge for your customers?
Well, one of the biggest opportunities now, specifically in Latin America, which is largely underbanked, is what we're experiencing right now is massive digitization of consumer services, where a lot of people that were underbanked are becoming banked. And I think COVID is becoming a major forcing function for that digitization to happen as people remain more at home. They're managing more of the financial services from home, from their cell phone, as opposed to having to go out into the street and pay those services physically. So that's been quite opportunistic for our respective clients. And we continue to see massive transaction volume spikes as the pandemic progresses, and we think that's a change that's going to be here to stay.
And I don't obviously know too much about that South American markets, but I'm sure it's similar to other markets that are growing rapidly. What have you seen in the legacy banks and how they're reacting to the quicker, more agile fintech upstarts, for example? How are they reacting to those to ensure that they don't lose their customers or customer share?
So, and that's an interesting question. So the banks in Latin America have gone through a natural progression where they were faced initially with a degree of resistance. Yeah. And that resistance was manifested in them building internal departments to say, I'm going to build this internally. I'm going to invest in R&D heavily, and I'm going to build my own products. And then the second wave started happening which is the current wave we're currently in. It's like, well, instead of building internally, we're going to outsource and we're going to start working with third-party tech companies that are not encumbered by legacy and can move a lot faster. And we're buying speed in essence. And that's why bigger banks like Citi, Banamex, BBVA, Santander are now kind of being more proactive as far as working with third parties, right? And modifying their processes to work with third parties. Just to give you an example, we're working with one major bank that we just signed, and their procurement process, their vendor procurement process, was 2 years, just the
Wow.
procurement process, just to become a vendor, right? Not being integrated, not signing a contract, just to be a vendor was 2 year process, and they've all come around to the notion that, look, this is not gonna be able to help us, right? So they're all changing their policies internally, and I think it's a cultural and attitudinal shift that's happened internally, where they know now their hair is on fire and they need to make changes.
You raised a really good point. I don't often discuss this in a podcast, but I think people often are mistaken. You think it's easy to go and work with these big companies, but equally, as you just said there, you could be wooing and building relationships with stakeholders that often change within that 2-year cycle when you're trying to sign some kind of vendor MSA to deliver a solution. What have you seen the cycle change in terms of with these big corporate companies? Have you seen the cycle change to a quicker, more agile way because they know they need to adapt? Have you seen that?
Yeah. They are a lot more progressive. They are a lot more experienced now, and I think it's happening. What's happening now is, like, when you look at these banks, and because it's gone through these cycles, you saw the first wave of kind of the tech evolution, like, let's say post 2009, post the smartphone. A lot of people were working at these banks, and they were quite optimistic about the bank's capability to build tech internally. And those same people have been frustrated out of the banks. A lot of people have left those banks, and the bank is reacting to that. So to them, is not only about adapting to the market, it's also about retaining good talent. So if you don't adapt, not only you're going to lose market share, you're going to lose really great talent internally, and so you're kind of burning the candle up both ends, basically, if you don't adapt. So it's a double-sided sword.
Now, I know you have a strong investment background yourself and private equity yourself. Tell me about those early days in the company. Let's go back to 2013, early 14. How did it all start to come together, and what was that first 6 to 12 months like? Can you share a bit of insight into that?
Yeah, I think if you ever read the concept of this trough of sorrow, I don't know if you're familiar with that. It's when there's the company typically come out of the gate and there's a big peak of excitement, and then that excitement crashes hard. It's very traditional in any startup to come out that way, and I think we definitely saw that. We came out of Y Combinator, where Path of TechCrunch Disrupt had a very public kind of product launch, and after a while, we kind of stumbled with that first version. Back then, the company was called Regali. Now it's Arcus. And I think one of the lessons we learned is that this is just a standard part of the process, right? The trough of sorrow. Somebody named it that way because every company literally goes through that.
Yeah.
That degree of novelty and excitement is always there at the beginning, and then that kind of masks your problem. Like, do you have product market fit, right? And ultimately, once we went through that process, then we knew better. Okay, this is what product market fit looks like. This is what it doesn't look like. We need to change the model, and ultimately, that's why we shifted from Regali to Arcus.
So tell me, if we bring us up to date, right to today, tell me what a typical day in the business looks like for you right now. What are you up to generally?
Well, we just closed our round. To me, I think, me personally as CEO, I think there's two worlds. Is like you're either fundraising or you're not, and even when you're not, you are. So when I'm fundraising as a CEO, you're only fundraising. You try to minimize contact switching. It is quite an intensive process. Typically, I've spent at least a third of my time in the company's life fundraising, at least 30% of the 8 years that I've been doing this. And when you're not fundraising, you are typically either gearing up for fundraising or recruiting and doing bits and pieces of business development, kind of financial overview, you're always kind of maintaining relationships with your board and potential investors. But now that we just closed this round of financing, we are focused more on kind of recruiting, bringing on more talent. We got to hire about 30 people. We're really excited about that. And doing it during COVID is a bit tricky because you can't meet the person. So that's I think the two stages that I would kind of cite, fundraising or not fundraising. And obviously we're a bigger company now. As you're approaching 100 employees, you're becoming kind of an organization, and you have to have processes, and you have to have some layers of hierarchy, and you try to avoid bureaucracy so as much as you can. But yeah, I think that's kind of how I would distinguish it from
Now, I know we didn't talk much about your upbringing, but I know you obviously born in the Dominican Republic. Were you there as a child? Did you grow up there?
Yeah, I was born and raised in the Dominican Republic. I came to the States when I was 12. First came to the South Bronx, grew up uptown Manhattan. And it was quite interesting living in New York City during those times. Very different city than what it is today. But that gave me kind of an opportunity to see a very different, unique world. That I think it gave me a lot of tools that I still use today.
Yeah, can you give me an example of something that you that sticks with you today?
You got to be tough.
Yeah,
you got to be tough. I mean, when you are, just to give you context, when I first came to the States, my junior high school was located, and this is a true story. I literally was walking towards my junior high school, and I get to my junior high school, and next to my junior high school there was a correctional facility, and it's like, wow, this is so emblematic of the place that we're in. These kids get out of school, and the first thing that they see is a correctional facility. Like there's this is your limit, right? Your limit is like there's nothing to aspire to here. And I think that was quite reflective of everything I saw very early on. Became very familiarized with gang violence and just how to not wear the right colors, the wrong colors, having to get home at a certain time, and you just become really, really tough by age 13, and you become an adult much quicker. And that kind of forcing function for becoming more mature really paid off major dividends when I was approaching the whole notion of becoming an entrepreneur.
Now, and that's great, and I appreciate sharing that. It's a different world for many people. Now you've got, I don't know how many people you've got down there, but you've obviously got the business growing in Mexico City to service, I guess, your South American customers. How long ago did you have the operation there, and why Mexico City? And can you tell us what it was like setting that up?
So Mexico is second biggest economy in Latin America. And my co-founders from there. So initially, when we started the business, we did cross-border payments, cross-border bill payments, and Mexico being the largest recipient of remittances, it made sense to establish a presence there. So when we pivoted the business to fintech as a service in 2017, from Regality to Arcus, we just kept building the team there, much more affordable resources in terms of engineering. And in sense, has grown from a couple of guys to now 50, 60 employees.
Amazing. Well, and we'll come on to it in a bit, but there's a lovely picture on your website of obviously some of your team, or most of your team down there, of that beautiful view. I don't know where that is. Where do you know that picture? What I'm referring to with some
that is, it's Acapulco.
Ah, lovely, fantastic. So, wow, that looks a lovely picture.
It's nice.
So, tell me, bringing us up to date. How obviously lockdown in New York was a tough time back in is it early March now, thinking back to it?
Yeah.
What was that experience like for you, and with COVID and the challenges of the business and new operations and home, how did you adapt, and what's been the biggest learnings from that for you and your team?
It's an interesting question. So I think for us that the adapting wasn't that much of a challenge. We already had 1 or 2 days a week that we were working remote. So that adaptation. So going from 1 day remote to 5 days remote, it wasn't as challenging as I expected. I think going from 0 days remote to all days remote is a major challenge because you need all kinds of processes to make that happen. But I think the processes are secondary to the communication. As you know, 87% of communication is nonverbal, so it's easier to communicate if you and I are kind of next to each other, looking at each other. We can understand mannerisms. So what we're doing now is, instead of we used to have a one kind of all hands every quarter, and we now do it every 2 weeks. So everybody knows, understands the state of the business. So we just like to communicate and over communicate. That's kind of the rule of the game. Always try to do cameras on people. You see people. Any additional cues of communication you can do are better. But we just communicate at least 3 times as much as we did before.
Yeah, I mean, how does it work between? I mean, obviously you're used to having different offices and communicating together. How have you kept that? How have you kept that company culture between two distant offices, particularly those two, Mexico and New York, Mexico City, New York? How have you kept that culture together as a company and tried to engage everyone as one team?
It's been a challenge, and not, like I said, I think being remote, I think really helps.
Yeah.
But the challenge is, of course, that we can't travel to Mexico, so I can't see anyone. So you try to do all these huddles, team huddles, all hands more frequently.
Yeah.
Everybody is getting on the phone all the time and speaking out, and you make it interactive. Some people ask questions. So I think that's been the biggest change we have done. But yeah, I think it's something that we're trying to get adapted to it, because no one knows when this is going to get better. Some companies say June of next year, other companies say 2022. We don't know. So I think what we're trying to do is just trying to communicate and over communicate as much as possible.
Have you, talking about that, and that remoteness, and you're not able to go down there yourself at the moment, how have you seen that adapting to your customer engagement, or perhaps your prospect engagement? Have you seen any change in the way customers are engaging with you over video rather than you hopping on a flight down there?
Well, they don't have a choice.
Well, that's true.
and they don't. So I think that what we've seen now is that, in terms of the actual impact, is there's a bit of a delay in terms of how things get signed, how things get pushed forward. But the counter to that is that I think people have, because they're less traveling, they're more available, right? Because there's less commuting, there's less traveling, they're more available. So people are more readily available to respond to an email or hop on a call. So that's kind of like, there's all these kind of silver linings around the pandemic that we try to exploit, and that's one of them.
What I know we touched on it a little bit earlier of your childhood there, but is there a story you've got that perhaps you could share from your early childhood that perhaps influenced your work ethic in later life?
Sure. My first job. So I think in New York you're supposed to be 14 to get a worker's permit. My dad got me a job at Seatown, which is a supermarket. I remember this like it was yesterday. It was 145th Street in St. Nicholas. And the supermarket opened on a Saturday at 9 a.m. I was there at 7:30 a.m. and I was packing bags. And I wasn't very good at it at the beginning, but throughout the day, I got very good at it. And the first day, I think I worked there till like 6 p.m. I made $18.25 in change, like literally like quarters. And I took that in a bag and I showed my mom, look, mom, I've made money. And I was 12 years old. And I was just so proud of, like, even though I started off horribly, and like even the checkout counter person screamed at me because I couldn't pack a bag for my life. I didn't know concept of double bagging or anything like that. I was packing like the eggs at the bottom and canned soups on top of it. A mess. But I got better at the end of the day, and people gave me tips. And I made $18.25 on my first day, and I was super proud of that. And it was like, it doesn't matter if you start off weak, as long as you learn,
Yeah.
and you're proud of what you're doing, I think all's well. So it's one of the things I've learned very early, and that the fact that earning the value of a dollar, very very early.
Mhm.
I think something that was the other element behind it, like understanding that. Because I meet a lot of people who've never had a job until they're 22, 23. So the fact that I did it at 12, I think gave me a lot of just perspective.
We also did very early jobs when we were at a similar age here in the UK in London, like the paper round or whatever else.
Exactly.
What do kids do now at 14 in New York for jobs, or are they too busy being YouTubers and making revenue that way?
YouTuber influencers. I don't know. Maybe. Yeah. Well, maybe that's a good one.
Well, look, no. So what? Look, you've obviously been through change in the business as it's grown and developed. If you were giving someone advice for who's going through tremendous change, and COVID's probably taught you a few lessons, what would you give as advice for someone going through tremendous change in their business? What would you say to them?
Well, this is not my saying, but it's something I believe is change is constant. Specifically, if you're in tech, change is what you're signing up for, and adapting to that change and being proactive to that change, and
Yep.
and seeing where the puck is going, not where the puck is something that's kind of what you're signing up for, right? That's part of the process, and I will see everything that's happening as opportunistic, not as threatening. And think about the opportunities there. Like I just mentioned at the top of the conversation, how COVID is actually an impetus for digitization of financial services,
Yep.
specifically in America, where about 2/3 of people are not using a bank account or a credit card; they're using cash. They're going to be more digital in the upcoming years, and that's likely not going to change. So, where's the silver lining? Where's the glass half full on this? How can you take advantage of that? And where isn't it half full? What are the disadvantages of this? And try to address that and mitigate that as much as possible. So that's my approach to it.
Where do you see the market going over the next couple of years? I mean, obviously there's huge growth, but where do you see the opportunities? If you had your crystal ball, what's exciting you right now in your industry in particular?
In fintech and Latin fintech?
Yeah.
I think it's what I mentioned. I think it's everything around digitization of financial services. Like Latin is very specific because you still have, if you look at the US, you look at Europe, you look at Asia, most customers are already using digital financial services.
Yeah.
Then if you go to Latin, it's the opposite. Most customers are not using digital financial services. So you have the majority of people who are potentially your customers. So when you look at all these fintech companies, they're really targeting only the minority, right? All these fintech companies in Latam, they're only targeting the minority. And the concept that the majority is still coming creates a massive opportunity in the market, because you can shape and mold their behavior. You can capture the consumer's mind share. And I think that's going to be a huge opportunity for the next decade.
On that note, how do you buy, or buy is probably the wrong word, how do you gain, sorry, I should say, that consumers' trust in moving to those services when they've been so used to the old ways of working? And I'm sure that's a challenge, particularly when there's issues within some of those digital services going wrong. How is there an education piece? Is there challenges around trust, and how do you see that being overcome?
Yeah, there's definitely an education piece. I think one thing I've seen our clients do a lot is that they try to lower the barriers to entry. They have incentive structures. So like, say we'll give you 100 pesos of digital currency in our digital wallet, so you can start using it. So part of it is education, part of it is familiarization. Another element is just socializing it, making if your daughter or if your cousin or if your niece or nephew is using something, you're more likely to adopt it because there's a degree of familiarity. So we're seeing a lot of these fintech companies leverage kind of 6 degrees of social separation, leverage incentives, mitigating the risk, reducing the risk, and also, especially in Latin America, leveraging existing physical infrastructure. I think that's been one of the biggest shifts. What I mean by that, using Walmart as an example, is that instead of going all digital, they use their physical presence. So you can go to a physical Walmart, deposit cash into your digital wallet, right? So there is so as opposed to going from 0 to 2, you go from 0 to 1 to 2, right?
Got it.
So that incremental step in the middle makes it easier.
Who are you really keen to build relationships with? Who are you interested in connecting with right now? Who are the relationships you're keen to develop further?
Yeah, anyone that wants to build a fintech product in Latin America is people that we talk to, whether you are two gals in a garage, or whether you are a VP at a major multinational bank or a major retailer. We want to talk to everybody. Fintech is something that's going to become a natural part of every business, we believe. So we want to help those companies get there as quick as possible.
Fantastic. And just as a final question, you've shared some great stories about your childhood, but if you were giving just your 20-year-old self one piece of advice, looking back now, which is probably about what university or college ending time, or starting time, I should say, in the US, what's the one piece of advice you'd say to yourself right now?
I would say that pain is as much as part of success as success itself. It's a necessary part of it, right? So don't run away from it. Don't squirm. Embrace it. Learn from it, and move on, right? Don't be afraid of it. Like it's part of the process, and it's only temporary. All pain is temporary. It ultimately it'll go away, and on the other side of pain there is light and success. But if you quit, it'll last forever.
True story. That great advice. Edrizio, thank you so much for joining me and giving up your time. If people want to connect with you, if they want to find out more about Arcus, what's the best way they can do that?
On Twitter, at Edrizio Cruz.
Fantastic. And obviously, if you're interested in getting on the website, you can just go to arcusfi.com. That's ARCUSFI.com. Check it out. Connect with Edrizio. If you connect with him on LinkedIn as well, make sure you say you listen to the podcast. Edrizio, thanks for joining me. Good luck with the business.
Thank you, buddy. Thank you for having me.
We really hope you enjoyed the podcast today. If you want to listen to more exclusive tips and life lessons from our guest, go to the resources page at vineresources.com.